Hi everyone and welcome back to today's morning report with me, Richard Perry, market analyst at Handtech Markets for the 7th of April, Monday. Cable now, we're going to move on to sterling dollar, and certainly sterling dollar I believe has broken down a little bit in the last few days, and what I'm going to do now is I think that you can pretty much just get rid of this potential flag pattern that had been developing purely because I think that the number of days it's been correcting is pretty much equal to the number of days it's rallying, so you can't really call that a flag anymore. So you would say that it's still under pressure to the downside, and certainly for the moment there's no real prospect of a breakout to the upside of that move. So you're back into the realms of this big uptrend being tested once more. The 89-day moving average remains the base of support, but also you've got this uptrend that's been in place since August as the basis of support as well, but that is being seriously tested once more, and this decline could continue back towards this 89-day moving average, which would suggest that the trend is beginning to certainly lose some sort of momentum. The fact that also you've got these momentum indicators, MACD, which is rolling over already, having barely gone positive, I think that would suggest also that the bulls are beginning to get a bit tired, and maybe the selling pressure could start to ramp up somewhat. So this uptrend is going to be certainly an important indicator in the next couple of days as to whether it can be held. You would argue certainly that the move back in the middle of March, where you started to break that uptrend, never really confirmed it because the highs were still above that uptrend, so I'd be watching out for that. If the daily high starts to come in below the uptrend, then I think you'd start to suggest that uptrend is breaking. On the intraday chart, you'll see even more pressure to the downside. You've got this chart, this head and shoulders top pattern that completed. That actually gave us a target of 65.55, which actually was achieved on Friday. 65.52 was the low. But this 38.2% Fibonacci retracement, which I've spoken about so many times, has once more been the basis of resistance having been broken. It got tested on several occasions throughout Thursday and Friday, and now pretty much bang on got hit on Friday as a reaction high and fell away again. So that becomes once more, I think, an increasingly important gauge as to where this chart's going to be moving. I think the momentum indicators certainly suggest that there's downside pressure still. This is just an unwinding situation that's just renewing downside potential on both the RSI and the MACD lines, and you'd suggest also the stochastics as well. So I think anything around that 65, I mean, you'd probably start to think about that 55-hour moving average, which had been the basis of support on the way up and is now sort of rolled over and become the base of resistance. So I think anything around on this chart, I'd be saying anything around probably that 65.90 to up towards that 66 big figure. I think that would probably constitute a chance to sell this chart, as I think there is further downside to come in this in the coming days, and I think rallies are a chance to sell now. Anyway, I wish you good luck in your trading on cable today, and I will speak to you later. Thank you.